Despite the Western sanctions, Russia continues to export its gold. After the G7 and Europe blocked Russia's traditional export routes, its producers found new markets. The United Arab Emirates, Turkey and China became the key centers of trade.
Firms in other countries are still allowed to deal in Russian metal due to the lack of secondary sanctions, so there's no suggestion any rules are being broken. The United Arab Emirates has emerged as the top new destination for Russian gold. Most buyers are based in Dubai, which has long been a hub for precious metals trading between the East and the West, from a publication of the Bloomberg website.
Since the beginning of Russia's full-scale war against Ukraine, the United Arab Emirates has imported almost 76 tons of Russian gold, which is 10 times more than, for example, in 2021. Its total cost exceeds $4 billion. This is approximately the 12th part of the Russian defense budget in 2022. In other words, the proceeds from the sale of gold to the Emirates were enough for Russia to sponsor the aggression against Ukraine for a month.
Russia, as in the case of gas and oil products, is also looking for a possible option for circumventing sanctions, including sanctions against precious metals and gold in particular. It uses mainly grey or black bypass schemes through shell companies in said countries. In any way, the Russian authorities are looking for options to sell, to earn currency, and they need this, unfortunately, in order to continue their war against Ukraine.
The EU and G7 embargo on the import of Russian gold cannot fully protect member countries from getting into their market of sanctioned metal, said Louis Marichal, an expert at the Organization for Economic Cooperation and Development.
If the Russian gold comes in, is recast by a local refiner, sourced by a local bank or trader and then sold on into the market, there you have a risk. This is why carrying out due diligence is instrumental to end buyers wishing to ensure they respect sanctions regimes. Louis Marshall, gold supply expert at the Organization for Economic Cooperation and Development, in a comment to Reuters.
Secondary sanctions are capable of changing the situation. These are economic restrictions that are imposed on entrepreneurs or companies that have not refused to cooperate with sanctioned Russia.
For any international company, losing, for example, the American market or the Canadian market or the European Union market is an immeasurably greater loss than the loss of any contacts with Russia. Now the general trend is towards tightening its screws as much as possible. The possibility of trading operations on key commodity items for Russia. There is a very high probability that in the 11th package of sanctions there will be a restriction or ban on trading in Russian gold.
The European Commission announced restrictions against 90 companies worldwide in the 11th package of sanctions. The new sanctions will be designed precisely to close the loopholes that Russia uses to make money bypassing the restrictions. Reported by Diana Kulesnik, Valeria Nekipelova, UATV News.